Hi everyone, so this video that I'm uploading now is a specific request from some students that have contacted me asking me to just go over what the details of this are. So what I'm going to talk about here is close companies. Now, before we get into the question, we have to talk about what a close company is. Now, a close company is defined as when the company is under the control, i.e. over 50% ownership, by either the 5 biggest shareholders or the 5 biggest shareholders and any other shareholders who are connected people to these 5. So, if 5 people own 48, but this person's husband or wife owns some, if that goes over 50, they are counted. Now, the reason for this is if a company is decided that it's a closed company, there is a chance that favourable decisions can be made by the owners to the benefit of individuals. So there is certain different criteria that we follow, and there is mainly one extra area of tax which can be suffered because of these relationships. Now, the main reason for identifying a closed company is to see whether a company is eligible for what is called Section 455 withholding tax. Now, that is concerned with where directors have outstanding loan accounts at the end of the year. In other words, directors owe money to the company. Now, if it's not a closed company, then it would be deemed that this isn't a problem because lots of people must have been involved in the decision that allowed people to take that money out in the first place. However, if it's a closed company, in other words, the company is controlled by a few small number of people, then it's very clear that decisions can be made in personal interest. So, Section 455 withholding tax is calculated at the end of each period. If there is amounts owing, then an amount of whatever is owed must be paid over to HMRC. It's a withholding tax. The minute the loan is repaid, the company has it back. The idea is they want to encourage the company to get the loan repaid. If the loan is repaid, they get the tax back. So there is no effect on the company. It is designed to stop companies lending money to directors on an endless basis that isn't really a loan, then it's income. So, moving on to this question that's on Nile for you, we're talking about Dave. A close company which prepares accounts to the 31st of March each year lends £50,000 to Dave. Lucky Dave. Dave is a shareholder. They lend this money on the 1st of June 2016. The company pays its corporation tax on the 1st of January each year. On the 1st of December 2017, Dave repays £30,000. On the 31st of March 2019, the company writes off the remaining amount of Dave's loan. So, there are 2 effects here. The first effect is on the company and the second effect is on Dave. So the first thing we're going to look at is how the company may have to pay over some Section 455 tax for the loan that's been made to Dave. And here's how we do this. So, I'm just going to turn the lights on so that's more visible. The Section 455 tax is calculated on the outstanding balance at the end of the year. If money is loaned to a director in the year but is paid back in the year, that doesn't matter. This is only calculated at the end of the year. So, in this scenario, on the 1st of 2016, there is a loan made to Dave of £50,000. On the 1st of December 17, he repays £20,000. So the balance at this point is 30. Let me check that. No, that's the wrong way around. The balance paid is 30 and the loan is 20. And then on the 31st of March 2019, the 20,000 is written off and the balance is 0. So by the 31st of March 2019, the company has done one of 2 things. It has either reclaimed the money or it has written it off. And when it writes it off, it becomes income to Dave. So, now we have to look at how this affects the company. And remember, this is only counted at the year end. So the next time there is a year end, after the 1st of June 2016, is on the 31st of March 2017. And at the 31st of March 2017, The balance outstanding is 50,000. Now, what we then say is this. That balance is outstanding at the year end, so section 455 tax is due. And it is due at 32.5%. And what we have to do now is figure out how much that is, because that is the amount that the company will have to pay over to HMRC. So 32.5% of 50,000 is 16,250. That is the amount of withholding tax that the company must pay across to HMRC. Now, the Section 455 withholding tax is paid along with the company's corporation tax. So at this point, on the 31st of March 2017, the company will be paying its tax on the 31st of December 2017. And they pay that 16,250 along with their corporation tax bill on the 31st of December. That's that year's done. What happens then is the next year end, there is an assessment made. Is this the amount that must still be held? So the next year end, which is the 31st of March 2018, the balance at this point is after this, because this amount was repaid during that year. So 20,000 is the outstanding balance. So the balance outstanding at this point is 20,000. Now these are independent calculations done every year. So then what we have to work out is, with the balance being 20,000, what figure for Section 455 should HMRC be holding at this point in time? So at this point in time, should be 6,500. Let me check. So the amount that they should be holding at this point in time is 6,500. Now, this is when we have to consider that they are already holding 16,250. This is a rolling balance. If this figure was higher than this, they would pay extra. This figure is lower than this. That means they can claim money back. So the difference between these is a refund due of 9,750. Now, when we paid the Section 455, we paid it with our corporation tax. When we are due a Section 455 refund, what we do is we knock it off our corporation tax bill. So what happens here is this, the 9750 is deducted from the corporation tax payment that will be made on the 31st of the 12th, 2018. So if the corporation tax bill was £10,000, they would only send 250 and they would say, that's it, don't send us any money back, we've paid it. That's how Section 455 tax is refunded, as a deduction on corporation tax liabilities. So if the company didn't have any corporation tax liability, they could ask for it back. Or if the corporation tax liability was less than the refund, they could pay nothing and then ask for something back. But in the normal course of actions, you reduce it off the corporation tax bill. So now we move on to the next year end. And at the 31st of March 2019, the additional £20,000 is written off. So the balance outstanding at this point is zero. If the balance is zero, then the Section 455 tax that HMRC should be holding should also be zero. They're currently holding £6,500 of our money. They should be holding zero of our money. Therefore, we can claim a refund of 6,500. And again, that will be deducted from the corporation tax payment, which will be due to be made on the 31st of March 2019. So you can see here that by the time we get to the 31st of March 2019, there is no loan. Some of it was repaid and some of it was written off. So there is nothing outstanding in the receivables of the company for this amount. Once that happens, there should be no Section 455. Made the loan, loan repaid, loan written off, there is no longer a receivable, therefore Section 455 is returned. This is designed to stop companies having ongoing year-on-year directors' loan accounts which are never chased up. The idea that you take money from the company and never pay it back in goes against the principle of a loan. It would be, so when it was written off, what would happen there is it would become income. Now, this is the effect on the company. As long as the company has a receivable, there will be some Section 455. As soon as there is no receivable, that will be cleared and all returned back. The next video, we'll think about how this affects Dave as an individual. What does he record as income and when and how does he pay tax on it? So that'll be the next one that comes up. I'll also take a picture of this board and put it on Nile as well so that you can look through that. I hope this was clear and we're able to figure out what had happened. If not, please email me. Maybe there'll be another video. Maybe we can swap emails and figure out what's going on. Okay, thank you. Bye.